What was it?
Lock up with Larry Jones, Stock Mo, and Sir Keenan Grace, aka the Core 4. The markets, they were absolutely on fire today as Fed Powell appeared before Congress in his two-day semi-annual monetary policy testimony. It's been speculated by bearish Wall Street pundits that the Fed was going to strategically use these sessions with Congress to prepare the markets for a higher than expected terminal Fed funds rate. We're going to go right into it today and get these gentlemen's reactions to what happened today. Go ahead, Mo. Give me your initial thoughts.
Well, I got to tell you what. One, I love being here with the Core 4. It is a family reunion every time we get everybody back together, and I love it. So thank you, Josh, for having me on the channel, and I look forward to a great thing. Everyone, before I get into my spiel, make sure you subscribe to all these gentlemen here. They got great channels. Put the minds to work. You got a lot of people doing the homework. You get the answers to the test, and then you go in and ace it. Now, today, as we see with the Fed, we talked about this over my channel. We were discussing it yesterday, and I said what I expect is a sell the news kind of event where the Fed comes in and talk. It doesn't matter what he says. At this point, the odds are he's going to say he's going to have to do more. You have to get more aggressive. Things are more tight. He's going to have to go higher than expected, and it is exactly what he said. And so when it comes through like what you're expecting, and of course you see what the markets tank a little bit. And the surprise to me, and I'll admit this, is that TMF, for those following me, you know I've been loading the boat with the triple leverage TMF, which is a 20-year Treasury. And I was surprised because personally, I thought, all right, I'm probably going to take a little bit of a hit on TMF today, and I'll buy in. And I had dry powder ready to rock and roll. I was ready to get I'm not chasing crumbs. I'm trying to get the loaf here, and I was ready to go. But to my surprise, and I had to really dig into the info and stuff, TMF goes up. We see the 20 years rallying a little bit in a good way. And I was like, wow, okay. So I think what happened, and you have to process the information, the data coming in, is that we watched as the market kind of collapsed, and then you have a flight to safety. You see people, and I'm telling you, it's going to happen. You have them running to treasuries. You have them running to the safety of bonds, because if you can get a 5%, over 5% for a short term, under a year treasury, why would you go into the stock market to try to get an extra 1 or 2% and possibly lose 20%? You're guaranteed at the end of that year, you're going to be able to get your money out plus an extra 5%. That's what it's about. And so I think you had a lot of people hearing Jay Powell talk real hawkish, and you had a little bit of a flight to safety because all that demand helped to push that a little bit lower, which pushed TMF up. And so I was kind of, like I said, I was a little surprised, not about what Jay Powell said. I said it before. He comes to Thanksgiving, and the man brings possum souffle when we're looking for turkey. That's not the kind of guy I want to invite. I'm looking for pumpkin pie and some good things. He brought the nasty today. And we'll see where it goes. But at the end of the day, we're seeing the Fed say we're going to be tighter. We're seeing the Fed going to do more with the rates. We see the 50 basis points now is the projected for March 22nd or March 23rd. And so put all that together, we got volatility coming. Now, I still believe, just so people understand, we're in the sidewinder, the snake in the desert. We're in the sidewinder market. We still are going to go between 42.50 and 39.50. Eventually, as we get closer to summer, in my opinion, you get that final leg down. I'm calling it now. In the end of Q2 through Q3, somewhere in there, we get the final leg down. We hit capitulation. We hit the bottom, and I'm loading up on TQQQ after that, which I'm sure we'll talk about here in a little bit. So that's my take on it. And I want to start by this. Let me be the first. Happy birthday, Keenan Grace, the man, the myth, the legend. I wanted to say that right off the bat.
Mo, that was excellent. That was absolutely excellent. Keenan, you are the man of the hour. Today happens to be this guy, this wonderful guy's birthday. Keenan, the YouTube's missed you. I was looking for your videos. I bet this video is going to go off the hook today because all your people are going to be streaming over here to get some Keenan time. Keenan, give me your reaction on the market today.
Okay, so first of all, I'd like to say thank you for the birthday wishes. Yes, today your boy's turned 32 years old, and I'm happy and I'm proud of it because I know, I got a few gray hairs rolling in, but there's a lot of people who I've known who haven't made it to 32. So I take it with a lot of honor. And I want to say this. Jeez Louise, did Jerome Powell sure put his foot right where the market goes. Now, understand this though. These things these things happen, and no one should be surprised. No one should be surprised. One thing that I want you to be surprised in is when you see things turn around too quickly and say, is this normal? When we see that, it looks like the market's going to pump up. So in the next few days, because what you have oftentimes is a situation where the selling happens too fast. So it can't maintain that downward momentum. So then you get little spikes, and they call that the bear market rally or the pump fake. You don't want to get caught out in any pump fakes when you understand that we're still living in a inflationary period. But behind the inflationary period, you got to look at the balance sheet of the regulators and the people who are in charge, and you'll see that, you know what? Inflation is kind of like a dam where there's something behind it that's also bad that could just flood us in. So let's say that we even got past inflation, then they have to handle the balance sheet. So it's a multi-pronged kind of an issue here. But right now, we just get to look at the immediate one, which is inflation, because there are many people, and this statistic came out last year, that couldn't afford, and it was half of the United States couldn't afford a $400 emergency. But when you look at the numbers, the average household expenditures are now up $438. So if they didn't have $400 to handle an expense that came out of nowhere, how are they going to afford over $400 in monthly expenses for the same things that they were getting last year? But they got to pay more for it. What do? They go in debt. But guess what? Like I said, with that balance sheet that we got, more people are going into more debt with higher interest rates. So it's just getting worse across the board in terms of what's been allowed to happen in the economy. And this is all, and again, you be the judge, but just the facts are the facts. This is all a consequence of all of the money being pumped into the market. And it wasn't just, your average everyday person getting a stimulus check. It wasn't just the PPP loans. A lot of governmental institutions, a lot of different organizations were getting so much money to do almost anything. After the pandemic, you could, on hindsight, it's definitely overreaction that now we're suffering through all of that. People's retirement accounts are suffering. People's trading accounts are suffering. People's paying at the pump, all around the board. So now we see Jerome Powell, and many people are saying, oh, yeah, it's just because he was just speaking. It wasn't just necessarily because he was speaking, even though that's been a negative catalyst time and time again. It's because he said something that nobody wanted to hear, but we all kind of knew it was true. And it was that inflation and the battle that they're going to have with it is likely to be even longer. And he specifically said, I had it here. Let me see if I can just read it real quick to you. It says, so it's trying to reload, but he basically said that the interest rate in the battle against the interest or inflation is likely to go on longer than expected. And then this battle that they're having is likely to progress faster than they expected. But again, we all expected it, but people just didn't want to hear it. So then the truth is coming out. So now, this is one of the main issues before I let Larry go. And it's this. They kicked the can down the road again. They told us at one point that the terminal rate was going to be about 4.6% for the Fed funds rate. Mm-hmm. Then they said, we lied. It's actually like 5.1. We lied. It's like 5.3%. And now they're telling us it's like 5.6%. So why should we believe them now? So then what people are doing now is like what Mo was just saying, is they're flying to safety. What is safety? There's almost no safety outside of getting into bonds, because bonds are almost the closest thing you can get to a guarantee and a return really in the world, right? Because you lock in a contract where they'll give you a specific percent. So imagine this. Imagine that you could keep your money in stocks and you're a $1 trillion asset manager, right? $10 trillion like BlackRock, having all of this money in assets. You could watch it, this 10 trillion turn to 9 trillion, or you could just start selling everything right now and then lock in a lot of bonds. And then guess what? The people who are invested, the people who are shareholders, the people who have stake in your profitability as a company, they'll say, oh, wow, you know what? Everybody else is losing money, but you guys figured out how to go up 5%. Meanwhile, the market crashed 20%. So there's like a 25% difference, and you guys ended up positive. This is great, right? So then they bring in more customers. So at the end of the day, a lot of institutions are seeing these high rates. They're flying to safety. They own 80% of the market. I know you heard Larry say that 100 times. They own so much of it, and now they're trying to lock in the high bond rates. And someone said to me, they said this, Keenan, everyone's saying that the dollar is getting stronger, but the dollar is actually getting weaker. Long term, yes, the dollar is designed to get weaker. But with these interest rate hikes, it's become more attractive to have cash and to get into bonds. So short term, the dollar has been stronger than it was in previous times. So then people are trying to just protect their money. And that's where everyone is now. And I want you to think like that too. Get into a state where you say, okay, this is what I have and this is what I need to protect. So when you hear Mo saying he's getting into bonds, what he's doing is sort of a defensive protection kind of a move rather than always being like a perma bull and trying to just I forget what you would say, Larry. It was something like, when you chase a bull, it was something about how it'll turn around and it'll get you. But that's what I got. You Larry, you can go.
Let me
It'll mow you down.
I want to ask Larry a question. First of all, that was really good. Thank you, Keenan. Hey, thank you guys right now for hitting that like, and just take a minute and go and subscribe to each of these gentlemen's page if you are not already subscribed. I am subscribed to each of their pages. I absorb their content. I love their opinions. That's why we're getting together now. We don't agree on everything. We're not just going to be bringing our opinions or reactions to the market. We're going to bring some stocks to the table. We're going to dialogue about what's been working and what we think might not be working. Larry, before we get into that, let me just ask you a question. So one of the things, I'm going to have you play Fed Powell. We don't get political on this station, but we're pretend like we're here in Congress.
Wait a minute.
There you go.
Okay, I'm ready.
I'm going to play Congress, all right? I'm going to ask you.
I got it.
2 million Americans, why should they have to lose their job? Sir, please tell me.
Well, it's the only way to stabilize the economy, basically. The truth be told, Josh, is there is no other way. Jerome Powell's job is not to save the stock market. That's what I need everybody to understand. It's to save the economy. And because people have jobs, meaning they have money, meaning they spend money, meaning they keep causing inflation to go up because demand is there and supply has not fully caught up, then the only way to make that reverse is what? We have to cause unemployment. That's the truth of it in order to get inflation under control. So his job is not to make everybody employed. His job is to get control of inflation.
That's awesome. Let's talk a little bit, guys. I want to give people some meat today. First of all, Mo, I loved what you gave us, a very straightforward prediction of a range that you saw the markets in. I'm going to come back to you, Larry and Keenan, to get a little perspective on what your thoughts are, in the micro, in the macro. Where do you think these markets are going the remainder of this week and into next week? None of us know. We don't have a crystal ball. Let's throw out some stocks that are working. I'm going to lead with GEHC. This is one of Larry's picks, GEHC, and it's at the top of the range. It's only been pushing higher, and it looks to me like it wants to break out. Larry, I know you've been making some money on that. What are your thoughts on GEHC moving forward?
It's at the top of the range. Actually, I still have a call option going on. Am I appearing choppy on your end, Josh?
The stream quality did drop, but I think it's the best we're going to get.
Okay, I'm going to do a reboot live. So, but GEHC, I still have a call option at $77. I had one at $76. But you do know that just like bonds, there's what's called safety stocks, right? Healthcare is supposed to be one, right? But we always say, never say that this time is different. This time we've had a lot of differences, but things are the same, if that makes any sense. So healthcare hasn't done the best, but it's been steady. All right. GEAC has been a rock, as you know, Josh. It
Yeah.
has been a rock through the turmoil. So I actually added to my positions today. And it's a company, General Electric, that's getting into the healthcare business. As you guys know, that weight loss company, I forget which one it is, they're getting into the healthcare industry. And a lot of major companies are buying like these teledoc type of companies because they're getting into healthcare. And it's a growing market because we're living longer and we're having more health problems. So GEHC is a strong stock for me, and it's heading in the right direction. In if and when we get a lower leg down, or we have a rough landing and end up into a recession.
I agree. So I'm going to just quickly go over some stocks that are winning. There's stocks, no matter what happens every single day, there's money to be made on Wall Street. I think that's what draws and attracts the four of us to Wall Street, is that it's constantly representing real opportunity for those who want to show up, get prepared, do their homework, have nerves of steel, be willing to fight through emotion, push past being that retail money and evolve into the smart money. But right now, there are stocks that are at their 52-week high. First Solar is not at the 52. I think they are above their 52. Yeah, First Solar is 52-week high. General Electric, 52-week high. Las Vegas Sands is a stock that I called out a couple months back. They're now at their 52-week high. I was looking today for stocks that were cheap. I wanted to find some cheap stocks for the family that are at a 52-week high. That does not guarantee that they're going to continue to go higher, but I did find a couple I'm going to give you guys today. One is UWMC. This is at its 52-week high. They had previously in 2020 hit $15. They fell all the way down to $2.85, and the chart is looking pretty green, and it's consistently climbing. There is negative fundamentals. There's a lot of heat on the company because of that fall. It's remained largely in a hold and sell by a lot of analysts, but it's amazing how that stock is slowly creeping up. And what that tells me is they might have some impending news or a really good earnings that the smart money knows is on the horizon. I'm going to flip it back to you, Mo, and I'm going to ask you about what interests you right now? What's working in your portfolio? What did you buy today? What did you sell?
I got to tell you, a couple of things. One, it wasn't today, I ended up buying TMF yesterday. Loaded up some additional TMF to triple leverage. So that had a nice little recovery day. I was looking at the treasuries. How about the 2-year, guys? Broke 5% today. Went up 11 basis points, 4.89% up to 5%. You can lock in today, and you can go and buy straight from the Treasury and buy 2-year Treasuries, guaranteeing yourself 5% over the next 2 years, 5% and 5%. That is incredible. That is what is working. If you want to go ahead and do a nice little, the old, what was it, 60-40, where you buy 60% equities, 40% bonds, and you can put some of these treasuries in there. It's a good way to guarantee yourself that you don't lose money by buying the treasuries because, like I said, it goes up. Now, what's the danger? Inflation keeps above 5%, and you lose some of that purchasing power. Now, I think the Fed actually is doing the right thing. I think the Fed's going to beat inflation. They are absolutely in constrictive territory. If they raise 50 basis points, you're going to see inflation getting hit in the nose, man, just right in the nose. And you're going to see that coming down nicely over the next 6 to 12 months. I'm not going to be surprised if we hit deflation. You heard it here first. We will, and I'm not going to be surprised, during the recession, get to a point that student loans are now due again. The excess savings is gone. It's wiped away. And of course, the credit card debt, which is at record high, has to stop because they can't keep borrowing forever. Credit card companies clamp down. We have the defaults on that. We're going through the roof. Car loans going through the roof. Student loan defaults going through the roof. All of this mixed together, and you have a major downturn in demand. Supplies ramping up. We know inventories are growing. future manufacturing orders are dropping off a cliff. And put it all together, my friends, it equals an opportunity to make money on the way down. Or if you don't want to do any inverse plays, you can just buy the Treasury. So I did take some risk. I did add on additional TMF. The family over at the Patreon knows that. And I like that one. But I got to tell you something, Josh. Let's get out of here and quit talking about what I'm always talking about, which is the Treasuries, bonds, and some of the inverse plays such as SQQQ and SPXU. These are 3-time inverse of the NASDAQ 100 and the S&P. I'm in those as well. But here's one I haven't bought yet.
All right,
Here's
tell me
one
about
for the.
it.
Let's talk about something I haven't bought yet, because we had a major lawsuit. You tell me if there's opportunity moving forward. This is SoFi. Everybody knows I was big into that back in the day. I got out. And now I said if I found a time that I thought SoFi was interesting, I would be loading back up, or I'd wait until we hit a bottom with the recession. This is one that I'm thinking about getting in before the recession. I'm not sure if I will, but with that lawsuit coming out, they revealed a lot of numbers. They lost 300 to 400 million in revenue from the student loans being paused. Remember when everybody's like, "Oh, it doesn't affect them." Now we know it did, and I remember thinking it does. And now we know it was 300 to 400 million. They also said if it paused all the way up to the end of August, it'll cost them probably between 20 and 30 more million in revenue. And so that gives us an idea how much they're making off of student loans. Because at the end of August, no matter what, though, we know what student loans are going to be due again, and that means the revenue of SoFi increases, and it's going to do a much better, I think, that is baked into the numbers now. That opened my eyes to a lot of data calculations, and I'm going to tell you this. I know it's a up-and-coming company. It's a growth stock. There's high risk with this, but they got their banking charter. Student loans are coming back. To me, if they can get through this and weather it, the positives are huge for Catalyst. And I think there's an opportunity, at least in the short term, once this, and this is the big one, once the Supreme Court fines for the student loans, and I think they're going to not allow them. Sadly, I know a lot of people are like, whoa, what do you mean, Mo? I don't think they're going to. I think from what I'm reading and the makeup of the Supreme Court, and I'm not getting political, but obviously there's a majority that are against it. I don't think it's going to pass. And I think that is absolutely going to help SoFi moving forward. I think it's going to be huge.
Well, I'd love.
And see the.
Well, I was going to say, I'd love to run some technicals on SoFi super quick here. I'm just going to I like to keep technicals
go ahead.
Super simple. What I've noticed about SoFi is, one, they're above their 50-day average. They had their simple moving average. They had been below it. And and you keep things really simple, when we're below our 50-day moving average or simple moving average, we're typically, in control of the bears are in control. We get above it. That's when the bulls gain control. We're still above it. It looks like it's consolidated. And I'm just going to throw out one of Joshua's predictions. I think that the line to hold is $6. If we remain above $6, I agree with Mo that SoFi is showing some relative strength, and it has not broken down. If you're in it, you might consider taking a position. Put your stop loss at $5.98, and if it loses that range, then just let it go. But right now, the bulls do have control of it. It's above the 50. It's consolidated above 6, and it isn't looking terrible. Any last reaction, Mo, to that before I go to Keenan?
Yeah, the thing I'm looking at is when the Supreme Court comes out and they fine, which I think is going to happen. I expect a short-term bounce, and then we'll see after that with the revenue increasing. And I do see some people in your comments saying, what about NEO? Give NEO love. Dude, I'm in NEO. I'm staying with NEO. I'm going to be buying more NEO. Everything I read, and I did a video on NEO, is that they are continuing to expand. Yes, the numbers weren't as good as we wanted, but they continue to expand. They want to be selling their cars in the U.S. by 2025. That's not that far away, folks, 2 years. We will see where we go with NEO, but for everyone who's in it with me, we're at that level. Now we're down at $8.97 today. It is ugly, but I'm going to continue to hold. I believe I'm going to continue to dollar cost average into this. I'm in this one. If we get to 2025 and it is still just dropping at that time, I'm going to take a major tax loss. I don't think that's going to happen. hopefully calmer heads in DC and over in China can work out their differences, and we can see these stocks roll up. Remember, Tesla gets 40% of their revenue in China. If anything happens between the US and China, it's not just NIO is going to suffer. Tesla's going to get absolutely devastated. And so beware of that.
And
That's it for me,
BYD and everything else.
Larry, I'm coming to
Everything.
you. I'm coming to you in a minute. Let me just get some reaction from Keenan. Keenan, we talked about some stocks here. Larry talked about his winning play with GEHC. We've got Neo. We've got Sofi. What worked for you, or do you have any thoughts on those plays? Your audio is muted.
Okay, guys, at this point, in recessionary/inflationary times, if you are looking to hold on to a stock for a long time, any amount of time, or add to your positions, focus on companies that are already profitable, companies that are already making money. If they are not, then you may look at them like a trade, meaning you get in low, you get out high. If you want to invest long term into something that isn't profitable, it's very likely that you're going to have a chance to get a way better price than you see right now. It doesn't mean that you can never do it, but just understand that. I'm not trying to give you financial advice or anything like that, but you got to understand the game that you're playing in. You can't treat a bear market the same way that you were treating a bull market. You guys been through a bull market before where everything was just double, right? Now you got to look more at the companies fundamentally. What does that mean? Are they making money or are they losing money? That's the long and short of it. If they are making money still, like, for example, companies like Microsoft, when you see the price on something like that coming down, you say, is it coming down because they aren't making money? Oh, no, they're making money. They're just making less money because demand is coming down. You understand what I'm saying? So you just look at it like that. Whereas if you wanted to go and get into something like Sofi, me personally, and you heard Josh even say it, he insinuated it, I would say, hey, look, if you get into Sofi at 6, put a stop loss at 598. A lot of people miss out on that part of it because they hear, oh, yeah, Josh is talking about Sofi. Let me just jump in. But then they miss the risk management part of it. You got to think about that. We're living in a time where Mo just told you, you know what? Student loans is on pause. They're not making money like they were. If you look at the fundamentals of the company, AKA, are they making money or are they losing money? It's very likely with everything going on, they are losing money. So you treat it like a trade. And I say get in, get up, and get out of something like that. But I did want to comment on this. 2 things. I seen a few things that go by in the comments. First thing I seen was somebody said about Baba. Hey, speak on Alibaba. Speaking on Alibaba. Right? So I'm looking at Alibaba. I'm looking at technicals right now. And I can see very, very clearly if it breaks under this, let's call it 87.90. Like if it breaks under 87.90, it's very likely, not guaranteed, but very likely to drop down to about, let's see. Oh, it'd be a straight fall right under that. So yeah, it falls under 87, just keep it flat. It falls under that, it's very likely that the put options on this are going to print. Family, I'm talking about crazy. But again, you got to know how to do it. Put options are how you can make money on the way down when you buy them, but you got to know what you're doing. Don't just jump into options. You'll lose all of your money if you have no idea how it's done. But that, what is it? Exactly 87.27. I can see the put options printing down there because there's basically no support for miles under this. So now, with that being said, another stock that I heard that someone said was Tesla, and someone in my chat earlier they were calling it Stressla, right? I was like, wow.
I love it.
They were calling it Stressla because one day it's at 100, 3 days later it's at 180, and you're like, oh man, I got in late. Now you didn't buy it at 180. Now it's up to 200. Then it's back down to 187. They're like, man, what's going on? You got to think about it. If you have a portfolio where you're trading Tesla, treat it just like a trade, where you have appropriate stop losses, whether that be a normal stop loss, a trailing stop loss, or anything like that. Appropriate. You got to have risk management. Now, if you have another account where you're just buying it, your goal should be, in my opinion, not a financial advisor, but you know what? Tesla is saying that they're going to sell. And let's keep this in mind because Elon Musk really just recently said this. Let me know in the chat. Put a 1 in the chat if you heard this information before. That Tesla, from when they started to now, have just recently crossed over the 4 million vehicles sold mark and produced. But he says by 2030, they're going to sell 20 million in a year. And they're not just saying this. Every time you turn around, there's a new gigafactory somewhere. Mexico, Berlin, they're everywhere. And they're actually ramping these things up to the point that they can make this a reality. So from the whole time that Tesla existed to get to 4 million cars totally, to saying that he's projecting out for it to get to 20 million per year in 2030, let's say that he's dead wrong and they're doing 10 million a year, half of what they projected. That's still nuts compared to where they are right now. So if these things come to fruition, and again, nothing is guaranteed, then in my account for Tesla, I'm just thinking, oh, how can I own more of this? If I bought it at 100 and then I bought it at 200, now my average is 150, it comes back down to 140. Oh, I have a chance to own more of it for less than my average. So then I would just take it. And then in my other account, my trading account, oh yeah, I know Tesla is having a hard time being at 200. So then I'm just going to short it and play it down back to 180 again, right? I'll trade it here, but I'll be loading up long-term here. So then you got to just realize which strategy are you taking? Because oftentimes, like I seen someone here say Alibaba, because they heard us talking about it in the last video, and Josh was saying, you know what, I buy it here and all of these things, but do you pay attention to the whole play? Where like with Sofi, hey, look, I will have my stop loss at $5.98, because what will happen is you'll come back and we'll be on the next live stream, maybe 10 live streams from now. Hey guys, Sofi is at $3. I bought it at $6. What happened? Didn't we talk about the $5.98 stop? You got to hear the whole thing. That's very important.
That's great. Hey, I'm going to cue you up, Larry, in just a minute. I want to throw out a couple responses. Guys, hit the like for me. I wanted to talk about Rivian. A couple questions on Rivian. My view is going to be, again, I like to keep technicals simple. It's got to break back above $16 to be bullish. You can always consider the idea of buying it as it crashes to get the best possible deal. But if you're looking to put money in and you don't want to see that money shrink away on you, and you don't want to be in a panicky mode, then consider buying it when it goes back up. It gets bullish when it gets back above $16. Tesla, I did a video, which I thought was actually a really good call. I told everybody when Tesla was trading at $200, I said, guys, the trade range for Tesla moving forward, it's going to fall beneath 196, and that may turn resistance above it, and then it's going to find support potentially as low as 171. To me, that is the longer term trade range. It does not mean that it's going straight to 171. It means that right now there's not a lot that would cause Tesla to rocket above 200 and go to 240. Okay, so there's not a lot that would move it up there. Most of the big news events are behind it. And so what I think is more likely is that it's going to bounce up against resistance, which is pretty well defined at 208 and a little bit lower at 202. And it's going to begin to drift down until it finds a great spot for support. There's support at 184. There's max support at 171. In my mind, I am going to be buying those moments of support at 182 and 171. I'm going to buy them for bounces there because we're going to vacillate. We're not going all down in 1 minute. Let me just throw out a quick question I got today, Larry. I'm going to set you up for this one. Thomas Jaws, it says, Josh, I subscribe to your channel. I'm trying to learn the stock market. I've been watching your videos, but do you have any suggestions on developing better skills? And I absolutely do. I've got these 3 men that I have partnered with to do these lives and to bring knowledge to you guys. And each one of them is teaching from a different perspective, from different set of skills. Larry is an amazing momentum trader. He's a great stock picker. I think that Mo has got a great investment mentality. I think he's pretty good at managing risk and looking at how to be diversified with ETFs. This is not all these guys are good at. These are just the things that I pick up. And Keenan, to be honest with you, Keenan is killing it. Keenan has a great Discord where he puts himself on the line and demonstrates live trading of options and tells you his disciplines, what causes him to act or to move. Each of them in the description of the video, you can find Larry's class, which would be a great place for you to grow your skills, Thomas Jaws. You can find Mo's Discord on investing, and you can find Keenan's Discord, and you can press into your option game. Larry, what are your thoughts?
Well, to his question, to where he could go, or just in general.
I'm opening it up to you, man.
Okay, so I'm just going to go for a few things. I want everybody to put ticker symbol DVN. That's Devon Energy. I want you guys to put that on your watch list. The Fed today, you know, I believe that's a Kanye West song. The Fed was talking about higher, faster, longer. Remember that? Higher, faster, longer, whatever that song was. You guys know. But that's what the Fed basically said today. Higher, faster, longer. With what? Interest rate hikes. And he's had this come to Jesus moment. He's been behind. He was behind on the way up with inflation, and now he's still going to be behind with on the way down. So just like Keenan said, we have to put our fundamental hats on now and we got to look at where the charts say we should be entering if we're considering a play, but we also got to look at the stock itself. Now, I'm going to briefly go, if you don't mind, Josh, I'm going to take 2 minutes. I'll be really quick. Devon Energy, if you pull it up, I'm just going to, let me just do that for people to see. So Devon Energy, yeah, you can see that. What I like about it is, number one, look at the PE ratio. The PE is 6.03. As you can see, it's tanked down in the last month, right? But if you look at the financials, this is what I really like on their balance sheet. If you look at their income statement, it looks and this is quarterly, so I have it in quarterly, and these are in billions. If you look at their income statement, they are really, they won't have to borrow any money this year. Let's just put it that way. They got good income. Their balance sheet is strong. And you guys could take a look for those of you that know how to read a balance sheet. And if not, it's in the class. All right. So I like companies like these that are a defense stock, right? In times like this, when you have the market tanking the way it do and you think it's going worse, then these perform well. I also think that all of energy is going up. I also have ticker symbol EOG, which is also energy. And these are the ones that have not done well yet. Let's keep it real. But energy will go up. Oil is not done, even with EVs, and I love EVs. But oil is not done and energy is not done. And I do believe that oil will go back up this year and pretty soon if things keep going the way that they're going. Now, they got hit today with everything else. If you look at the heat map today, just about everything, every sector was red. So everything got you know, when a whale splashes, everybody gets wet, right? But it presented itself as a buying opportunity for me. So I did some option plays on ticker symbol EOG and Devon Energy. And I just got in a little bit. And so I go out with options. I go out. If I'm going to hold an option for a day, I go out a week. If I'm going to hold for 2 days, I go out for 2 weeks. I went out a month on these option plays because I plan on holding these for a couple of days. Now, I don't go, Josh was just telling you, I'm a momentum trader. I don't go all in day one. I just did some buying, some light buying today. And then when the market went down deeper, I bought a little more. And I'm just going to watch these over the next couple of days because I believe I'll be green. And so I'm going to just leave it at that, gentlemen. Go ahead.
All right, I want to jump in a little bit on Devon Energy. And Larry, I appreciate you bringing these plays to us. I love to kind of go in and give some technicals. I'm going to give my thoughts on the charts. It is sitting on a key support fib level right now. It's literally on the line. So we could say that right now Devon Energy is sitting on support. Now, and I think it's probably waiting for these markets to determine the direction. And that's the next round of questions I'm going to hit you guys with. But if we stay on that support level and that support level holds, which it looks to me, let me just give you guys a price. 55.85. So if it stays and does not lose 55.85, and going back to Keenan's point of view, let's consider a stop loss at $54.85, a dollar beneath it, and that's actually a pretty tight stop loss. So it's not like, you know, in my view, that's pretty tight. I think there is a solid $5 move ahead of Devon Energy, a push up to about $60. And that's where I see the next level of resistance. I'm going to give everybody another small cost play real quick that I was looking into because I want people to be loaded up with some actual walk away plays. And that was
Hey,
a,
Josh.
go ahead.
Hey, Josh. Can I? Someone here says, let's get Josh to 50K subscribers. LFG.
I
I don't
think
know
that's a
what
great
LFG.
idea.
I don't know what LFG. Somebody let me know what LFG
Amen,
means. But
Joshy. Let's get it up there, folks. Hit that
look,
subscribe button for Josh. I want to see this
look,
go up 400
Josh,
right now. Getting to
400. Listen,
50K
listen. We could get this done right
now.
Why don't we just get this done? Like, hey, let's quit playing, good people. Let's get this done right now. Everybody that's listening, go to somebody. Y'all eating dinner if you're if you're in Midwest and on the East Coast, you're eating dinner. Go to your mate and say, here, subscribe to this page. Just get it done. So by the end of this live, we should be at 50K. I mean, it's Keenan's birthday, so let's celebrate Josh on Keenan's birthday.
Let's celebrate Josh on Keenan's birthday. You know what? I totally 100% support that because it sounds funny, but to be honest, I like
that's the kind
to
of guy
see
you
other
are.
people succeed. I do. I love it. I love to
Yep.
see other people succeed because I feel like, just like Larry
Yes.
said, you know, it's an ocean. It's not a fishbowl. It's enough out here for all of us,
That's
family,
right.
including you who are listening
That's
to
right.
this. So the one way that you will be able to win is you help other people to win. That's really how you do it in this world. You got to create a win-win environment, and then people will help you to win. Let's help Josh win, family.
Thank you,
I'm
Keenan.
sure that
Yes.
somebody you get to subscribe is going to actually really learn. It's not like you're getting them to subscribe to some guy who's posting cat videos. You see what I'm saying?
Keenan,
So
I got
easy.
you.
Hey, easy, Keenan.
Easy.
I have one that shows up here.
He didn't say
Hold up.
Tesla
I
cat.
take it
He
back.
didn't say Tesla cat.
Mo was like, easy.
That's another cat. That's
Easy.
another cat.
I hear somebody growling up the stairs here, so he's watching this video. He's not happy.
Keenan, I got you up. Let me
Oh,
just
man.
ask you your thoughts. Now, we are at a critical moment of support. I've said on my show back when the market, the S&P 500 was at 4,200. I said that for the markets to sustain a bullish run, they had to come back to 4,000. They had to bounce. We need volume. Here we are sitting at that 4,000 today. We got another day in which the Fed's going to talk. I'm just curious. Do you think that, I know that nobody's got a crystal ball, but I'm just curious what you think could happen this week or in the next month. What are your thoughts?
So to be honest with you, I think we could continue down further, right? We want to keep our eyes on a few levels. Like you're talking about SPX, I'll talk about SPY is what I'm looking at right now. So they're very similar, right?
Yeah.
So the SPY, if we break below, ticker symbol SPY ETF, about 387, the whole market, you might just hear, oh my goodness, it's the end of the world, right? It's going to be crashing. But remember, that means it's a bull market for the put options. So always try to say, how can I make money here rather than just folding your arms and crying about it, right? Now, other than that, I'll say that I would be shocked. Anything can happen. Let's be clear, right? Nobody's perfect. Nobody knows the future. But I would be shocked if we don't get 1 to 2 bear market rallies before continuing down. That's how I see it. I think we'll pop up and everyone think, oh, it's all good again. And then it'll continue down maybe twice.
Yeah, I think that's really interesting. Mo, it seemed to me like you predicted some sideways movement and a later
Sidewinder, baby. The Sidewinder will strike, and I'm with Keenan 100% on that. I don't think we're ready for the last leg down. I think we still have a few bear market rallies left. 100% with him on that.
Yeah.
Hey, Josh, were you about to give a play? Were you about to give a play?
I'm going to give everybody this play, and I actually don't have the ticker. Somebody look it up for me. I don't have it in my notes. This is a brand new play that I was looking at today and running technicals, and it's actually a Spanish bank. But I'm noticing that some of the companies that are on their 52-week high are actually in finance, which is actually quite interesting. It could mean that I don't know. I'd be interested in hearing Larry, Mo, Keenan, your thoughts on why finance might be setting up for a run. But Banco let me get the exact name. Give me 1 second.
I do have a short answer while you're
I'll
looking
tell
for
you.
Go
it.
ahead. Go
While
ahead.
you're
So
looking, go ahead.
I'll
Go
be
ahead.
very quick, Larry. So think about it like this: when you look at banks, particularly like online banks or anything like that, their customer bases are growing very fast because they're battling each other for who's offering the highest interest savings account, or even though the rates are so high, who's still offering relatively low, comparatively speaking, interest rates on the credit cards. So now people are looking towards the banks for services because people still need money, even though the interest rates are high. They can get more money from savings accounts. So more people are interested in high yield savings accounts. Like, for example, Discover Bank is like 3.5% now. But if you looked at it like a year ago, less than a year or 2 years ago, it was under 1% for a long time, which is crazy compared to something like the Bank of America, which is like 0.001%. So then a lot of these lesser known or smaller banks have an opportunity to really grow their customer base, and they are pumping out the marketing on that like crazy. Hey, look, we are offering lowest interest rate compared to everybody else, but we're offering the highest interest savings accounts. So again, their customer bases are growing. That's what I'm seeing with the financials.
Yeah, and well, with that, I'm going to give you guys the play. It is Banco Santander. Someone look up the ticker for me. This is a new play, and they're currently sitting at,
Got you on this, Josh.
I think it's BCO, but I
That's
didn't
my
want to
bank.
say it incorrectly.
That's my bank, dude. That's
Are
the
you
bank I
serious?
use. And
Are you serious?
I actually use that bank. And I walked in. I said, and they took over my bank. And I said, they said, you're saying it wrong. I said, what do you mean, Santander? They're like, no, it's Santander. I was like,
Santander.
oh,
Santander.
they made some.
My
Yeah,
Peruvian wife
Santander. I
would.
think it's out of. Yeah, I think it's out of Spain. I'm not sure, but
Yeah,
it's a solid bank.
okay.
I love
So they're North American, South American, and European based. And the stock price used to be back in 2007. These guys got crushed in the last Great Recession. They were sitting up at $22, and they've trended down for a very long time. But here's what I'm thinking, I'm noticing, is that it's very possible that they have hit the bottom, found support, and again, I'm noticing some very interesting momentum in the chart. I'm a technical trader. I do absolutely look at the fundamental story, but what's attracted me to this is the momentum it's building right now. It's sitting at $4. I'm going to make a quick prediction. If it can break out above, this is why I love this play, because it's simple and clean. I like clean plays. If it breaks above $4, I think it's going to push to $6. It's that simple. If you were to enter it, you could put the stop. Now, I would actually wait until it broke out over 4. You could create a signal in your account. Some accounts allow it, some don't. I use TradingView. It actually does allow me to create signals that go to my phone. You could create a signal that if it breaks up above 4, I believe we're going to see a push up to 6 at bare minimum. And what I like about this, if it breaks and closes on the day above 4, you can throw your stop loss in at $3.80. There's great support. See, that 4 was really been resistance for a long time. And when it flips, it'll be great support. Simple play. I love it. Banco Santander. Go ahead, Larry.
Is that a regional bank?
It is not a regional bank. These guys specifically offer refinancing. They offer banking, other technological banking. They're based out of Madrid, Spain. They serve Europe, North America, and South America. And to be honest with you, exactly what their products are and what their specialty is. What I read in a couple briefs today was mostly things about the reason why the stock is moving is because of their scope of refinancing. And I think that I'm wondering, this is where I kind of would love to pick your guys' brain. I'm not a big real estate guy, but are we going to be seeing people forced to refinance? Are we going to be seeing that in the course of this year? I did read an interesting report. I'll give you this data point. This is one of these data points that's actually solid and good and shows the strength of the economy. That the 65% of the mortgages right now that have been created were created in 2020 to 2022 when the rate was extremely low. So a lot of Americans did the smart thing and they rushed in and they locked in that low rate. So currently the majority of rates, back in 2007, there was a ton of rates that were not secured at a low rate. We actually have really good data here that there's a ton of rates that are secured at a low rate. But some of these banks are emerging. What are your thoughts, Larry?
Well, in 2007, number one, as you know, I made a ton of money. 2008, you know, I made a ton of money off of regional banks. Remember back then? A lot of you guys don't know. Me and Josh been trading together that long. But I will tell you, the interest rates that people were getting back then, those were adjustable arm rates, right? So one day let's say you have a house and your mortgage is 1,500 a month, and then the following month the arm would go up, and then now you're paying $3,000 a month, and that was part of what caused the recession of 2007 through 2009, though we call it the recession of 2008. Now, like you said, a lot of people got 2.5 2 years ago, and the ones that had higher interest rates actually wound up refinancing. So now, a few days ago, a 30-year fix went to 7% again. It touched 7% again. So most of the people, like you said, Josh, are already locked in at a lower rate. Those adjustable arm mortgages that were decimated in 2008, there's only like a fourth of those. So I don't know how this bank is making money off of that. Maybe they're getting into technical financing.
Larry,
That
I'm going to
type
throw
of thing.
another question at
Fintech.
you. Let me throw another question at you while I've got you up, because I know that you and I have had conversations about this sector in the past. The best performing
Yeah.
sector today was one that I actually don't care for at all. I hate
What's
stock in
that?
this sector, shipping and airline.
Yes.
Those are
Yeah.
fast turnaround. I don't consider those
Well,
investment companies. They run
yes.
up at certain seasons and
Yep.
moments. They're not. I'm never going to have a shipping or airline company in my long-term portfolio. It was today, though, the one of the
Yeah.
best performing sector. Curious your thoughts on that.
Well, people are doing what's called revenge travel, right? So me and my wife booked some tickets today to see Earth, Wind, and Fire and Lionel Richie, right?
Awesome.
I will tell you the most we've ever spent on a concert, period. And I said, they're coming, I'm going. We haven't been to a concert in 2 years. And I was in the music industry and we're music people, right? People are doing revenge travel. And that hasn't stopped since the airlines opened up from COVID. And it hasn't. People don't have the money in the banks. Savings are going down. So what are they doing? They're overextending on their credit card, right? The ticket agencies that do the concerts, what's Live Nation? Live Nation is having a record-breaking year. Concerts, they can put a ticket price 2.5 times what it was pre-COVID, and they will still sell out. So airlines are doing extremely well because people simply don't care about the price anymore. They go out and they buy it anyway. Airlines are going to continue to be hot this year. And unfortunately, banks were supposed to be doing extremely well because of higher interest rates, but most haven't. JP Morgan in the last year has done better than most, but banks have not been doing as well as they should be having right now.
I think that some banks, it's a hit or miss in that sector. Some banks that
Yeah.
have a technology focus, I've noticed, have been doing well technically. The stocks have been slowly moving up. I don't believe that it could be said that the entire sector is worth investing in. I think it's going to be piecemeal. You have to find just the right ones. Somebody asked in the comment
Right.
section, can you play options on Moomoo? Yes, you can play options on Moomoo. And on that note, on any of these pages, you can find a link to Moomoo. And right now, there's a limited exclusive time offer of up to 17 free stock. You guys can click on the link that you could find on any of our pages and see the exact details of that offer. Mo, we're gonna be wrapping this up. I'd like you to take just a minute and give me your thoughts, your final thoughts on the day, the market, and what's interesting you tomorrow or the next day.
Never give up, my family. I got to tell you, once again, I love having the Core 4 in the house. It doesn't get better than spending this day with Keenan Grace on his birthday. Boy, thank God we have him here with us. And I hope we see another 85 to 155 years with Keenan Grace. I love it. Happy birthday, my friend. Let me give some advice to people out there. I'm getting on the soapbox. Surround yourself with people who make you better. And Keenan Grace, my friend, you make me better. So thank you for that. Now, on the continuation here,
I appreciate you.
I got to tell you, yeah, no problem, man. You deserve all the accolades in the world. You're a great guy. You bring really true betterness to this world, and I mean that. I'm not just saying it. Every time I talk to you, I feel like I'm a better person. And if I'm down, I know I can give you a call, and you'll definitely take me to that next level I need to be to. So thank you for being my friend. I do appreciate that. Now, with that all being said, folks, when it comes to the money, we got crumbs everywhere. I'm not here to nibble on them. I want the loaf. I want to buy the factory. And one way to do that is to not fight the Fed. We've been doing it. It seems like everybody continues to do it. You just had the Fed tell Congress that most likely, and remember, I think it was Senator Warren came out and said, what happens? How many times have we avoided recession when the unemployment went up 1%? And the answer, after a little squabbling, 0. We've always had a recession. We never can avoid it. And that's over the last 12 times they had to do it. And they have to do it again this time. They have to get up to 4.6, which is 1.2% more than we are now. Odds are we're going to be in a recession. Basically, the reason we saw the markets drop today is because the Fed basically said that. Don't fight it. If you know we're going to head into a recession, and pay attention to this, folks. I did the homework for you. We have never exited a bear market during a recession period until we were in the recession. And we haven't bottomed out yet until we're in the recession. So as you see the S&P 500 get a low of like 3580 or 3600 area, we have never hit a low until we are in the recession. If you use that data, and that's over the last 12 recessions, well, what's that mean? Well, unless we're going to break the odds, and it's 100% over the last 12, we are going to get down to 3,600 again. All right. So I'm not fighting that. And I'm going to go ahead and do what I think's right for my family. And I'm going to get into some of these treasuries. I'm going to get into some inverse is risky. There's decay, there's cost. You don't have to do the leverage and stuff. But the treasuries are here as your friend. The 2-year or the 6 months paying 5.2%. That is huge. Don't fight the Fed. Make sure you're paying attention. We still, like Keenan said, I agree with him. It's a sidewinder. We're going to have a couple more bear market rallies, but we will eventually, just like the last 12 times, get down to that 3,600 level, and we'll see where it's at. It's going to be roughly in that area, plus or minus a few hundred, depending on how bad the recession is. I don't think it's going to be as bad as the other ones. So the good news is the next bull cycle, it's going to be years long, and it's going to happen, I believe, in 2023 we'll get started. So the bottom happens this year, and the next bull cycle happens this year, and I hope we can make bank off of it.
Thank you, Mo. Larry, give me 1 minute of your final thoughts.
First of all, I want to say happy birthday, Keenan Grace. Let's get some oven mitts going. We need to have, somebody said we need to have a block party. We're going to have a block party. Hey, I just want to say this really quick. Look at this. This is the heat map today. Look at this. What that represents to me is opportunity. Opportunity. All that sea of red is just opportunity, right? And like Mo says, number one, let's stay positive. Let's look for where we can make money. And after every recession, after every downgrade, after every bear market comes a bull market, right? So we got to have some dry powder ready. Don't have all of your money in the market right now. Continue to DCA, right? And the truth be told is if you just zoom out, you see higher lows and higher highs. When you really zoom out, short term, it's actually staring down, right? But this is a long game right now. So we can go in, make these trades, do these options, grab some money, what have you. But the end result is, are we rebalancing and repositioning ourselves to win the long game? Because that's where the true win is, okay? So I'm going to leave it right there. I love you guys. You know, always sign off with live, love, laugh, learn, and now earn. Thank you for hosting, Josh.
Thank you, Larry. Keenan, final thoughts on the day. And go ahead, sir.
So I'd like to thank you, Josh, for having me on. Larry, Mo, Josh, again, thank you for the birthday wishes. Again, I'm going to get out of here and go hang out with my wife for my birthday. So I really appreciate it. And I'm you know, I'm a tough guy, but on the inside, I got a heart in there, family. So I don't know how to take praise sometimes. So if I feel a little off, it's just I'm just trying to process it, and I appreciate it all. So I want to say this: historically, we have not owned things, and who do I mean by we? I mean us, the people who are the retail. We're considered consumers, right? They even have a different index, to check what consumers are doing versus what companies are doing versus what the elite are doing, because they don't even really consider us all a part of who really owns the country. And I mean everybody, all of us who aren't in the top 1% of the United States. In this case, we have to say, okay, what is important then for us to look at going forward? And in my opinion, what that is ownership of the things that are making money. I'm not talking about go out and just spend all of your money on cars, or go and spend all your money on shoes or clothes, or get the biggest house on the block that's just burning the money, burning a hole in your pocket because of the utilities. It's crazy to keep the heat on, and your roof, your ceiling is like 20 feet tall, right? I'm not talking about going and blowing through your money. Buy things that really are going to add value, because think about it like this. At a certain point in time, just to show you how important ownership is, you couldn't even vote unless you owned land. Family, you couldn't even vote. The things you thought didn't count because you didn't own things. If you want your opinion to count, you got to own more things. And just think about this. Whenever anything goes wrong in family life, because I've known a few people recently who have lost very important people to them. When it all comes down to it, who gets the last say in what's going on with the caskets, the funeral arrangements, and many things like that? It's the people who are going to end up paying for it. These are the people who own more money or resources, who really get the final say in things. So whether it be a good thing or a negative thing, it all comes back down to how are you positioning yourself to have any amount of say-so in any event. How do you do it? You got to see. Like Larry just showed us the heat map, and you see, oh man, everything is down. Somebody said Tesla is Stresla, right? Okay, so what do you think Tesla can be in 10 years? What do you think Tesla can be in 5 years? What do you think the SPY or even SPX, what do you think it's going to be later on? I tell you this, and I seen Larry posted a reel on Instagram recently, a short clip, and it was more so about, hey, listen, if you're going to Starbucks, and shout out to Larry for this one, and you're going to spend 20, how about you spend 15 today? And then go buy $5 at Starbucks, right? How about you do that?
Right.
How about you just keep doing this same habit? And what you'll notice is over time, you're going to have way more than the version of you that did not do this. So invest in yourself, invest in your wealth. And if you can't do the heat, it is hot stuff. Now, invest in yourself, invest in your wealth. I love y'all.
Come on,
That's
hit
all I
it.
got.
Hit us with it. Hit us with it,
Consider
man.
investing
Go
in
ahead,
the
hit
index
us.
fund.
Hey, you know, I think all of you guys are great, and I often quote you guys. Sometimes I don't give, because I listen to all your pages. Sometimes I'll give the wrong person credit for something, but I repeat the things that you guys say. I love. You guys are all very entertaining. Keenan, thank you for sharing your day with us. I really feel honored by that. Stock Brother, thank you for the super chat. Stock Brother's got a
Stock
YouTube.
brother.
Yeah, he's got a YouTube page. I like his stuff.
Love
I
that
go and
dude.
check him out. You guys can go check out Stock Brother. I just want to thank everybody for tuning in today. I'm going to give you guys, I wish I could pull up the charts. I'll do that in tomorrow's video, but I've given it in my videos in the past. I'm going to tell you guys that from October to the present, we have been on a very solid trend line, and it's been hit a bunch of times, 7, 8, 10 times, and every time it's broken beneath it, we've seen a massive green candle get above it. So be careful getting too bullish right now until we get a confirmation. We're all aware of the fact that these markets are going down from here and not up. But the question is when. If you get into a bearish play too early and these markets go up to 41, 42, and even backtest 43, you are going to be hating life if you're in the SQQQ and it's sitting at $28 to $29 and the market's sitting at 2,300 on the S&P 500. So trade the charts, not your heart, as my brother Keenan says. I'm just going to leave it right there with all you guys. Thank you three for joining me. Hit the like, the subscribe, go to each of their pages. If you are subscribed to this page, you should be subscribed to the 3 of them. I'm subscribed to them. I consume their content. I love it. Thank you guys all very much. Peace and blessings, my friends. Take care.
Take care.